And we are live. We are live. We are live. All right, so like I said on the beginning of, on the weekly forecast, what I was expecting for this week, we had an amazing reaction out of this weekly buy, set, and balance, sell, set, and efficiency. That was the thing that I was waiting for to see how we are going to react based on this liquidity pool. As of now, when we look into the daily, we are inside of this daily volume imbalance, and if we're really bullish, we want to see displacement towards the upside. And pretty much it. As of now, let me see. We are inside of this daily where we ended up taking relatively equal highs right here. That's buy sell liquidity pool. We have a hourly busy right up here. And by the way, today I will be paper trading. It's yesterday I had a great win. And today we're gonna have FOMC meeting minute at 2 p.m., which I am anticipating the morning session to be just a little bit more choppy than usual. So again, it's a lot more important to know when not to trade than when to trade. I will easily anticipate like a run lower instead of this hourly or just 9:30 open and low and actually continuing higher. We have relatively equal highs right here. What is resting above those highs? That's buy sell liquidity pool. But let's see. Took this liquidity up here. There's a lot of back and forth in here. Relatively equal lows. Yeah, I'm probably gonna start using my other like um microphone, man. This stuff in the way ain't it, bro. This stuff in the way ain't it. I'm not feeling it. Because the other mic doesn't sound bad either. It doesn't like sound horrible. There's a little gap right here. That's little thinner. That's all I need. That's a busy buy side imbalance, sell side inefficiency. And we are respecting that little space right there. All right, so what if, just playing the devil's advocate, if 930 just opens and ran towards the upside, understanding that we're inside of that volume imbalance, and from this low to the lower portion of the volume imbalance, this whole thing is a sell side imbalance by set inefficiency. When we have a volume imbalance included on the SIBI, this wick right here gets completely ignored. So we are focused from this low right here to the opening of this down close candle. This whole thing is the SIBI, sell side imbalance by set inefficiency. So when we take this high right here, we're gonna be in an area where I could anticipate the market to reject from. But I would prefer the market going lower first and taking that social liquidity pool. But if it doesn't, we will be able to find a, if it shows up again. Not anticipating, but waiting for it to form. But here seems like an easy thing just to. And it'll be better if we leave this hourly busy open as a breakaway gap. For the reasons why we have this two consecutive down close candle, which is a bullish order block, and we also have a for value gap by set and balance, set and efficiency. So going into it, taking that liquidity pool as a total soup and then continue higher. This is a more generated buy side right up here. Mm, okay. So again, paper trading today. FOMC this afternoon. Mm, holy shit. I just showed up my fucking face, boy. I just showed up my fucking face. I mean, I'm already on the show, but I wasn't trying to show up my camera. This is funny as shit. This is the funniest thing in the world, man. It is what it is. All right, so what is resting below those lows? That's social liquidity pool. Let's see. Hmm. Liquidity pool taken before even 9:30 opens. All right, so we see 9:30 opening, kind of aggressive, I'm not gonna lie. But we took the Sosa liquidity pool right up here. Yeah. So liquidity pool taken. We have a low, a high, a low, high, high. This becomes a breaker. If we return into it, that can become a buy. Okay, nope. Why? This is what I'm talking. YM is literally just lower, like just like YM is doing its own thing. YM is doing its own thing. Jesus Christ. YM is just going lower and lower and lower. Alright, if we can have a return into the breaker, then that could be a long position. I want to see a return into it. If we do have a return into it. One of the reasons why I wasn't buying inside of the breaker, it's because we wasn't retracing into a busy. But again, Sosa liquidity pool taken. Alright, the breaker looks better on the Mm. No, going through. Stop loss right there. Buy sell liquidity pool. Jesus, look how slow it is. Just look how slow it is. And we got stopped out. Bro, what? Okay. Mm, okay. No sweating it. This is one of the most important things about like knowing when to avoid days like this. We're gonna have a lot of back and forth. Now, this is just more given the idea to retail traders that we're gonna leave those relatively equal highs intact. Like this is what it's called priming. So it's giving them, oh, it's strong resistance. We're gonna put our stop loss above those highs. Again, price it just does not enjoy leaving those relatively equal highs like that. All right, coming back to this down close candle right here on the 4 hour. If it taps like the high of it, that'll be a immediate rebalance. If it does. Mhm. Mm-hmm. Again, too juicy. If we create a busy on the right side of the curve, I will be going long one more time, targeting the buy side liquidity pool inside of this anticipated inversion FEG. Now this RR will literally not make sense at all in any way, shape, or form. So I'm gonna need a retracement lower inside of this. We might not get it. This is the thing. If we close above this inversion, we might just stop the inversion for value gap and go higher. But I'm willing to just risk it and not take the trade and anticipate a retracement inside of this busy, because yeah, that's a lot better. Because yeah, the risk to reward would not make sense. Because I'm anticipating those relatively equal highs to get taken. Better retracement into this right here. This is a lot better. There we go. So we have the Bessie that we were looking for. Targeting relatively equal highs. It's better if this stays open and we start going higher. We reacted off of the midpoint of this wick. Failed. So when we see a PDR rate that it fails to get retrace into it, that's a lot better than we having a retracement into it. That's literally a lot better. We are anticipating not to get retrace into it. And yeah. So breakaway gap, perfect. This is okay. This is one of the things about like being able to like read price action. Like I wasn't looking at this SIBI as, oh, the moment price trades into it, I'm gonna go short. Well, what I'm anticipating higher prices. So it could literally go 1,000 points lower, but I wasn't seeing that SIBI as a short. I only have one contract, so relatively equal highs. Let's just target this liquidity pool right here. Oh my god, bro. This game, bro. This is 80 handles. 80 handle move. And I lost like around 50 handles on this move, so 30 plus handles profit for the morning. Man, I'll take it. I mean, if it goes there, like I'm not saying it will. Highly likely it will, but it's better if this stays open, right? We tapped into the inversion. We should expect a displacement. Or I should have practiced like adding into the trade and then, yeah, I should have done that, but it is what it is. Shoulda, woulda, coulda, woulda, coulda. Well, and that's there we go. This is just horrendous, bro. This makes no sense. So that was the live stream. Pretty short one. That's what I was anticipating for the morning session. Again, like I said, it would have been better lower than higher. Relatively equal highs were too smooth. And yeah. Well, I got faded on this trade right here. First was anticipating this to be a bullish breaker, but we ended up going lower one more time, taking all that liquidity pool and then going higher right here. Going long inside of this anticipated inversion for value gap. The moment we had this displacement, right, and we closed above, these are all the things that I'm looking for. We closed above consequent encroachment. I already knew that most likely we're gonna go higher, because if we are expecting lower prices, we need to see the lower portion of an FEG, in this case, sell side imbalance by side inefficiency, to function as resistance on price. But what do we see? Disrespect of the consequent encroachment. We closed above. Then this candle right here, we faked out, breakaway gap. The lower portion should stay open. This gap right here should stay open because we closed above the inversion for value gap. We see price going into it and displacing higher. And what do I say? If we are anticipating higher prices, 930 equity open should go lower first. We see 930 going lower. We see this candle 929 taking out this also liquidity pool. We went lower, taking out this also liquidity pool one more time. And we are in an area where we are anticipating price to reject, which is the 2 consecutive down close candles and this buy side imbalance, sell side inefficiency. So when we extend that to the right, like I don't have it on the chart, but I'm consciously aware of those things. And again, easy. Then we closed above consequent encroachment. That's what I was looking for. Going long inside of this down close candle, targeting relatively equal highs. And these relatively equal highs are high probability because the one on the left is higher than the one on the right. So this is a high probability liquidity pool. And that was pretty much it. So I hope y'all got something out of this. How to manage losses and recover from it and be profitable for the day. Even on a day that I'm anticipating a lot of back and forth. And there we go. We're back inside of the range of the morning range. This is what you should anticipate on a day like this. And yeah.